So today we will discuss about tax. There are two words, tax and tariffs. Usually tariffs are used for the trade. So if there is a purpose of trade, then the word tariff is used, whereas if it is about the government revenue, it is about tax. So today we are not talking about the tariffs, we are talking about tax. And therefore I will discuss the different types of taxes and the most common types of taxes that we listen every day. Okay. There are mainly two types of tax. One is a direct tax and the other is indirect tax. And what are a direct tax? Those taxes which cannot be transferable from one person to another. That is a direct tax. For suppose income tax. Okay, you are earning 30,000 and 1% tax has been levied upon. And you have to pay that 1% to the government anyhow. You cannot transfer that 1% to the another person. So such type of tax are called direct tax. Direct tax are those tax which you cannot transfer from one head to the another head, one person to the another person. They are directly levied upon you. Example, income tax is the best example of direct tax. Now indirect tax. Those taxes which can be transferable from one person to the another, one to another, are called indirect tax. For example, goods service tax. Goods tax, service tax. Suppose government imposed tax on goods. Firstly, who pays the tax? The seller. Does seller really pay the tax? No. He will add that amount to whom? To the one who will buy that commodity. And finally, who will pay the tax? The one who will consume that. So the tax is being transferred from one to the another. For instance, let me give you an example. If you buy any commodity for rupees 100 and there is a 13% tax on that, now your commodity becomes 113. Now you will sell it not less than 113, isn't it? Because your cost is now 113. So you will sell it at more than 113. Okay, if you will sell it at 113 as well to the Mr. X, now you have transferred that 13 rupees from your head to the another head. So those taxes which can be easily transferable from one head to the another head, they are called indirect taxes. The best example is VAT, value added tax. Fine. In a hotel, whenever you go for your lunch, dinner, or any of the services you take from that hotel or the restaurant, the tax is imposed on that hotel, and that tax the hotel transferred to you, and you pay actually the VAT 13% to the government. So those taxes which can be easily transferred are called indirect tax, and those taxes which cannot be transferred are called the direct tax. So the direct tax examples are income tax and the indirect tax are VAT. Fine, good. Now we will look upon some of the common type of taxes. So the most common type of taxes are, one is a progressive tax. What is a progressive tax? The income tax system of Nepal is the best example of a progressive tax. In Nepal, up to 4 lakh, there is only 1% you have to pay. So if you are earning 4 lakh annually, you have to pay 1% of 4 lakh, that is 4,000. In case of couple, it is 4 lakh 50,000. Generally, it is up to 4 lakh, you have to pay 1%, and that is if you are earning 3 lakh 50,000, if you are earning 4 lakh, you have to pay 1%. Let's take an example. You are earning 4 lakh annually. That means you are paying 1% of 4 lakh, that is 4,000. So if you earn, let us suppose if you earn 4,90,000 annually, then what happens? 1% of 4 lakh and 10% of 90,000. Okay, therefore what will happen? 1% of 4 lakh is 4,000 and 10% of 90,000 will be 9,000, and your total tax will be 9,000 plus 4,000, it will be 13,000. And what if you will earn 5 to 7 lakh? So there will be 3 categories now. Up to 4 lakh, one category, 4 to 5 lakh, the another category, and 5 to 7, the another category. Up to 4 lakh, it is 1%, 4 to 5 lakh, it is 10%, and 5 to 7 lakh, it is 20%. For example, if your salary is 6,75,000, then what happens? Firstly, 1% of 4 lakh plus another 10% of 1 lakh, because of 4 to 5 lakh, it is a 10%, isn't it? So another 10% of 1 lakh and remaining 20% of 1,75,000. So how much total you have to pay the tax? Up to 4 lakh, it is 1%, means 4,000. 4 to 5 lakh, it is 10%. You have to pay 1 lakh. 10% of 1 lakh, it is 10,000. And again, remaining amount is 1,75,000, and you have to pay 20% of 1,75,000. And what if you are earning between 7 to 20 lakh? Now the category will be of 4. Firstly, up to 4 lakh, 1%. 4 to 5 lakh, it is 10%. 5 to 7 lakh, it is 20%. And above that, it will be 30%. Then there will be 4 category. And what if you are earning above 21 lakh, there will be 5 category. 1% up to 4 lakh. Then 4 to 5 lakh, it will be 10%. Then 5 to 7 lakh, it will be 20%. Then 7 to 20 lakh, it will be 30%. And above that, it will be what? 30%. Again, on the remaining value. So it goes on. So 20% again on that 30% means 36%. So what are the categories? Categories is 1%, 10%, then 20%, then 30%, and finally 36%. So there are 5 categories. How many categories? 5 categories in income tax. And if you are getting tax on the basis of your income, your progressive income, the more you earn, the more you have to pay, then it is called a progressive tax. Fine. So Nepal has implemented a progressive tax system in income. Okay. Then what is a regressive tax? A regressive tax is something that is an equal percentage. Fine. It is not a progressive. A flat tax, 15% to all, 10% to all, that is a regressive tax. Suppose you are earning 20 lakh annually, 15% to you as well, and someone who is earning 4 lakh, 20% to him as well, or 15% to him as well. The same rate applied to each and everyone on the basis of income, that's a regressive tax. Then there is a VAT. I have already given you example of value added tax on goods and services. They are a VAT. Capital gain taxes, those taxes apply to investment income. If you are, let's take an example for this as well to understand it very clearly. Suppose you purchase a share at rupees 100, and if you sold it at 500, then you have gained a capital of 400. So that's the capital gain. Capital gain is the gain on investment. You have purchased the share at 100 rupees, and if you are selling it at 500, then your capital gain becomes 400, and the government will imply the tax on that capital gain. That is called a capital gain tax. If we talk about the Nepalese context, it is 7.5% capital gain tax to the individual. So if you are individual, or if you are the person who is doing a transaction, then you have to pay 7.5%. For instance, let's apply the same thing in the above example. I have told you, if you have purchased the share at 100 rupees, and if you sold it at 500, you have earned 400 rupees, and government will imply 7.5% tax to you. If it is an organization or residential entity, they have to pay 10%. And if in case of accept these two, then the tax will be 15%. Fine. So this is how the capital gain taxes are usually applied. Then there is an excise tax. You have must listen. Excise tax. Excise tax. What is excise tax? Excise tax is generally implemented or levied upon the goods and services while purchasing them by the producers, or you can say the goods tax is levied upon the production process. The raw materials, they are the excise tax, or those commodities which you are purchasing from the other markets or from abroad. So taxes on the commodities which you are purchasing from the abroad are called excise taxes. Fine, good. So these are some of the major taxes that we come under all the time. We face those words. Actually, taxes are of two types. Fine, direct tax and indirect tax. One more thing. The first country to introduce VAT in the world was France. The term value added tax was introduced by France. So what is a value added tax? I have told you earlier. If you have purchased any commodity, suppose you have purchased a copy for 10 rupees and now you are selling this at 20 rupees, means you have value added here by 10 rupees, isn't it? The copy was of 10 and you have added 10 more rupees. That was a value added to this copy. Or you can say that you have purchased a flour of 10 rupees. Let us suppose you have purchased a flour of 10 rupees and you have made a bread of that, and now the price is 50 rupees. Means you have added 40 rupees value to it, isn't it? The 10 rupees flour becomes 50 rupees now. So you have added a value to it. Now the tax will be imposed on that new value. New value is 40 rupees. So now the tax will be imposed in 40 rupees. That is a value added. Earlier what used to be happen is a double tax system. That means firstly you have to pay tax on that 10 rupees of flour, and then you have to pay again tax on 50 rupees of bread. There was a double tax system. But France has introduced a new system, that is a VAT. The France says that no, we are imposing double tax on the people. So they introduced this system. Firstly, you have to pay tax on 10 rupees. Then how much value you are adding from it, you have to pay that tax on the value that you have added to it, not on the whole amount. For instance, I have already given you example. You have purchased a flour of 10 rupees and you have made it you have made a bread of it, and now the price is 50 rupees. Now you do not have to pay tax on 50 rupees. Instead, you have to pay the tax on the 40 rupees that you have actually added the value, because 10 rupees is itself a value that you have purchased. Therefore 50 minus 10 is 40 rupees. Now the tax will be imposed on 40 rupees, not in the 50 rupees. That was a VAT. And who introduced it? The France. And Nepal implemented the VAT system in 1996 AD. Thank you.